we go. Yes. Okay. So I was just talking about the events that are coming up. It's the 28th of November. This is for the benefit of the recording, everyone. And I have, let me see if I can find it quickly. What I did was I looked back. Yes, here we go. I looked back before the 87 crash and a little bit around 2000 near the top. And I want to kind of give you some perspective on what to expect. And I'm going to go ahead and disable everybody's chat. I will give you some time at the end to ask questions. So let's get some perspective here on some of the shenanigans that are played. This is coming into the October drop on the 9th, which is just a few days before. We had, this isn't from the Wall Street Journal, economists see one more good year, and the quote that I took was, I don't think we're at the top yet. I'm sorry, the Atlanta Journal. That's October 9th, 87. October 6th, in the stock market. Direct contradiction there in the same article. So just 5 days go by, and you have a completely different picture, don't you? Analyst believes Tokyo market is heading higher. This is all from the Atlanta Journal. October 1st, the bull runs fastest in Mexico. So coming into this whole, by the 13th, weak dollar and rising interest rates were lesser factors yesterday because of the Columbus holiday. Really October 11th through the 13th period, where there was a massive downturn. You have the news being talked up. Forbes predicts boom will continue if economic doomsayers are ignored. That's all coming into the peak there. October 3rd, going back a little bit farther, this is from Wall Street Journal. The recent release of leading economic indicators demonstrates that the economy is slowly gathering steam. So on the 3rd of October, the economy is slowly gathering steam, but then by the 6th, there are economic doomsayers that need to be ignored. And then on the 9th, we have economists see one more good year. Okay, so between the 3rd and the 9th, we have a little bit of disconnect there, don't we? On the 2nd, this is moving a little bit further back, analysts said a rosier outlook on interest rates supported by a firm dollar, rising bond prices, and the view that the U.S. trade deficit is narrowing encouraged buyers. On October 7th, the forces pounding the market, so this is coming into the 9th, the surge in interest rates slowed Tuesday, but the latest climb in rates contributed to a sharp drop in the stock market that knocked the Dow Jones Industrial Average into its deepest plunge ever. Okay, so let's, actually I just realized my dates over here are wrong. Let me scribble those out. So on the 2nd, remember, and again, the perspective here that I want you to get is as these events start to play out, you've got to realize what is going on in the news is, in a lot of cases, a load of malarkey. So remember, you've got the crash, and again, I apologize, I'm going on 13 hours of straight work, so my dates might be wrong. I think the crash actually was around the 9th or so. I'm sure once the attendee chat is is activated, someone will tell me. So let's recap this. So on the 2nd, stocks go up 42 points. Analysts said a rosier outlook on interest rates supported by a firm dollar, rising bond prices, and the view that the U.S. trade deficit is narrowing encouraged buyers. Then 5 days later, on the 7th, the surge in interest rates slowed Tuesday, but the latest climb in rates contributed to a sharp drop